105. I believe that risk will be off for the majority of the year. We will probably see further downgrades in the Eurozone, and this is not going to help the risk trade. I don't see risk being back on to any other than on and off, but I see it predominantly as off. And these moves are again repetitive. We get this little boost after the European hopes, only for it to turn around and crash even harder. And you can see that when we came down last time, we made a lower low below that 74 level. So if we're sitting right now selling into this 76.49, looking for a potential move towards the 72 area, there's some very good opportunity there. When we look at the US-Canadian pair, you can see that I have these three main risk-based currencies, commodity currencies, all stacked together. The US-Canadian pair, our key level comes down in at 102.75. Predicted MACD and predicted TSI fully supportive, as is the predicted medium and long-term differences, all positive. This bodes well for the US dollar against the Canadian, and we should be looking for a return probably towards the 105 level. But again, very susceptible to risk. So if the politicians come out, the central banks come out, start jawboning again, saying, "Whoa, everything's fine, the global economy is recovering," then you could see this start moving lower. But I believe if we move lower on the US-Canadian pair, it's still, as I've said to my own clients, it's been a very good buying opportunity. Anywhere between parity and 102, in my opinion, is a premium buy. Because looking at the commodity outlook does not support an overly strong Canadian dollar. And when we look at the other fundamentals, Canada hasn't created a new job in 3 months. That's not good for the Canadian dollar. So when we look at the pound, the pound dollar, the pound has actually held up quite well against the US dollar, and rightfully so, because they're distancing themselves from the euro. They're being very vocal. They want nothing to do with this. I would certainly agree with that and would be in the same boat as the UK. Key levels now we're getting very close to is 156, 155.45, and 155.13, with the close of 155.37. This one is somewhat flat, but again, selling into the strength is still the better play, because we are still predominantly buying US dollars. So when we look at these key levels, that's pretty much how I would play that. Now, coming into the Euro US, I'll spend a few more minutes with this one. We are oversold. I expect a minor bounce, which we did get on Friday, and with my own clients, we were selling into the 130.80 level. I think probably a pipe dream right now for the euro is 131.41. Between 131.41 and 132.74, I would say would be unless they're barring any kind of dramatic change to the European outlook, this would be a premium sell. I would still be looking at probably the 125 level. That is a likely outcome, but this trade, guys, is very crowded. And when a trade gets this crowded, I usually move aside from it. But again, we look at last year and how ferocious the market over the last year or two have sold the US dollar. This can be applicable to the euro the same way, that the market gets into their head that they want to sell euros, then they're going to sell euros, and there's nothing you can do to stop it. So just try and get the levels down right and kind of jump on the train. Don't let the train leave the station without you on it. But at the same time, make sure you're getting on the right train. Okay, and that's a silly cliche analogy, but it's something you definitely want to take into consideration, because I have my reservations that these politicians and the IMF and Bernanke is no friend of the dollar, will try and boost the euro back up. And so we'll see it. As long as we know these levels, I'm still okay with selling. I always want a premium sell if I can. So I would be watching this area up here somewhere between 131.41 and 132.74. However, if we get a downgrade from the S&P 500 on Germany and France, forget it. The euro will be at 125 in a blink of an eye. So if you hear that happening, or the rumor of that, then you would probably want to get short pretty quick. And we even though we're in an oversold condition, we clearly have room to extend to the downside. Now, when we look at the dollar yen, I don't expect any real fireworks to finish out the year, to be perfectly honest. We're sitting flat, bias still remains higher. And it's basic fundamental bond yield differences. I could go on for 20 minutes about the dollar yen, how it should be much higher than where it currently is. In first quarter of 2012, I would be looking for the 80 level. So right now, I'm going to sit here and hold positions. They're not doing much. Just kind of wandering around, but the dollar yen is a funny pair. All of a sudden it'll get moving, and sometimes that is at year end or in the very first quarter. So I'd like to position myself. My stops on these particular trades that I hold are down in the 74.90 level. There's about a 200 pip, minimum, almost 200 pip stop loss I would recommend on this. And then, like I said, I'm targeting higher, 80, 85, that type of level. So it's a good long-term trade, but it's nothing that's going to move too quick. Now, looking at the U.S. Swiss franc currency pair, key level I think is going to come in at 92.84. I'm making a recommendation to my own guys to buy down in this level. I think it'll hold. I think we're okay. The market's maybe overreacted a little bit to what the Swiss National Bank said about not raising the peg. I think the market is what the Swiss National Bank has said has been lost in translation somewhere. They're also saying that they are going to continue to weaken this currency. Now, they're not going to dump hundreds of millions or billions of dollars in there to move the peg up to 125 if the initial peg is holding at 120. You know, I've seen some pretty aggressive forecasts on Euro Swiss franc for 2012. I would have to agree with it that the Swiss currency, it was never a reserve currency. There's nothing to support that theory. With a shallow bond market, a virtually non-existent in global trade, they've got a great banking system, terrific, but so do other countries. That doesn't make it a reserve currency or a safe haven currency. Swiss krona and some of these ones, maybe that one might be a little different. That's a whole different economy over there. So we'll see. But for now, I believe that the euro will weaken, and that will help push the U.S. Swiss franc trade higher. And it's going to be a very, very tricky week ahead. But remember one thing very, very clearly, that we are going into an extended period of very low volume, where the currencies will basically wander around and do little to nothing, and then all of a sudden you'll have a violent move, and that's because there's no liquidity in the system. The bigger players, they're going to start shutting down for the week. So, you know, we always want to trade when we have good volume in there. We have more stable price action. We don't have wild price swings with stops getting knocked out, and it's very, very important to keep that in mind. So with that said, this is the Forex Weekly Outlook for the week of December the 19th, 2011. And again, my name is Greg Furman, market analyst here at Trader.